Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will update our classical technical analysis view for the S&P 500 index over the short term. And as usual, let us start by the monthly chart to check the major structure of the index. We can see, of course, that there is no uptrend anymore and the sellers are in full control over the long term. But the June candle, the June Japanese candlestick, is not as bearish as it was in the previous video. The slight correction that took place in the last week, in a form or another, began to show some balance between the buyers and the sellers by the end of the month. So we can see the shadow of the monthly chart. We can see it here. Here it is. Here it was the shadow. And so all of this was a slight correction over the weekly chart that decreased the seller's control over the monthly candlestick. We will see this later in more details on the weekly chart, but for the monthly chart, the index managed to recover a little bit and returned once more above the falling channel line from the weekly chart, because a break below this channel line was going to put much more pressure over the index, which did not happen. Okay, let us check the weekly chart for more long and medium term picture. And here we can see that the medium term and the long term is downtrend, clear and valid downtrend, lower highs as well as lower lows. And by the last week when we talked about the index, we said that this gap is very dangerous because it is a downward price gap and it broke the channel line and it showed a very strong selling pressure during the break of the channel line. And the candles themselves were big with almost no shadows, very tiny shadows, and the close of the index was always very near to the lowest level. So the previous 2 weeks indicating very heavy selling pressure. The final week showed that there is some kind of correction and the index managed to return once more above the channel line, and it closed well above the channel line. So we can say that this behavior may lead to a kind of correction over the short term. This correction can come after a slight sliding over the channel line from the opposite side, or continuous drifting towards the nearest short-term resistance around 4,100 levels. And of course, if the correction is strong enough, it may target the very important weekly resistance around 4,245, ranging up to 4,300. So it depends upon the strength of the correction. But it is always considered a correction as long as the downtrend is valid. So keep in mind, counter trend trading is not preferable for the time being, because it will be against the prevailing downtrend, and any virtual trading against the trend should be with a very small proportion of the virtual cash, maybe 1% for maximum, if any, to be traded against the trend. Take care that the correction might not reach all the resistances. It may turn back to the downside from 4,100 or turn turn down to the downside before it reach 4,245, or it may just turn around very soon before reaching any of the drawn resistances. So please take care that the virtual trading against the prevailing trend is very dangerous and very high risk, and it may not be profitable or easy as it seems, especially because the conditions concerning the Russian-Ukrainian war is still the same and may get worse. Political disputes between China and America due to the Taiwan issue is still not resolved, and the energy crisis is still in place. So all the bad events are still in place, and it may get worse at any time, which may push the index suddenly in an impulsive wave to the downside at any given time. So please take care that counter trend trading is of a very high risk, especially now. On the daily chart, we see that there was a buyer's control in the final weekday on Friday, and it managed really to close above the channel line. So there's nothing new over the daily chart to be said. Just keep in mind that as long as the index manages to close above 3,857, it is okay, and a correction is likely to continue targeting 4,100. If it drifted downside a little bit, it's okay, but just keep in mind that the channel line should not be broken once more to the downside, because if that happened, this indicates that the impulsive wave is resuming its south targets once more. So it's very important for the S&P 500 to keep above the down channel line drawn in blue, which means that it should not break below 3,800 by any means during the next week or the week after. And as we have already said, please keep in mind that trading against the prevailing trend is very dangerous and not as profitable as you may think, especially due to the very high hazard circumstances such as the Russian-Ukrainian war and the energy crisis. That's it for now. Thank you for watching. Please keep in touch and subscribe, like, and share. See you soon.